I'm Kim Hope from Sharon Partners. Welcome to our quarterly market update for the first quarter of 2021. As always, I'm joined by Dr. Steve Garth, who sits on our investment committee to take us through it. So, Steve, what do you see as the main themes for the quarter?
Yeah, hello Kim, and hello everyone watching. The big theme for the quarter is just the vaccine rollout, which will determine how quickly economies recover. The other big theme that I see is the fact that markets have had a really strong quarter, and so when you look at the first chart we've got here, it shows how markets have been in what's called a bull run since 2009, rudely interrupted by COVID-19, but otherwise the market just seems to keep going up. The other thing that was big news in the quarter was that 10-year bond yields really rose quite unexpectedly and quite rapidly. Now, that won't mean much to most people, but when bond yields rise like that, it's an indication that the market's repricing their expectations of inflation for the future. Doesn't mean interest rates are going up anytime soon, but the market is sort of saying they think that inflation will be stronger than anticipated.
Thanks, Steve. Can you tell us about how the various asset classes have performed?
Yeah, sure, Kim. With the first slide I've got up here, I'm showing the asset classes of cash and bonds. They're on the left-hand side. In the middle are equities, Australian, developed and emerging. And then on the right-hand side, we've got real estate. And when you look at the left-hand side, you can see the bars are going down. That's the bonds have got a negative return for the quarter. That might surprise some people, but it's not unusual for bonds to occasionally have negative periods of return. And it's associated with the fact that those bond yields went up. When bond yields go up, bond prices go down. But against that, when you look in the middle of the equities, Australian and developed equities returning 4 to 6% for the quarter. That's a really strong quarter in returns. And when we look at real estate on the right-hand side, the global real estate is the best performing asset class for the quarter. Now, that's coming off a low base, but it also shows that the market's pricing in that investing in property is not as dire as we might think.
Okay, can you take us through what the main drivers were in the Australian market?
Sure. In the chart here on the right-hand side, I've got a pie chart, and it shows you the breakdown in the Australian market in terms of sectors or industries. And I don't think anyone's surprised that the largest sectors in Australia are financials, they're the big four banks, and materials, which are the mining companies, BHP and Rio. And together, those two sectors make up about 50% of the Australian market. So clearly, depending on how they go, really depends on how the stock market goes. And you can see the way the different sectors have performed in the bar chart on the left. The main thing to take notice of this is that in 2020, financials were the worst performing sector, or the worst performing industry, no surprise. But in the first quarter, financials have really turned around. And Kim, if I dive a little bit deeper and compare that to information technology. Now, information technology is a very small part of the Australian market. It's only about 4%. But last year, it had a phenomenal return of around 80%. That's after pay and zero. But in the first quarter, that technology sector has had a negative return of 14%. And yet financials have had the strongest return. So that's really helped the Australian market, the fact financials have done well. If I turn to the US market and show you the same picture of the way that their sectors look like, you can see that the biggest sector there is information technology. Think of Apple and Microsoft. And then on top of that, a further 11% is in communication services, which is Google and Netflix. So together, those two tech sectors make up about 40% of the market. No surprise, last year, those tech sectors had a huge run. They returned about 100% collectively for the market. And such a big part of the market really dictates how the American stock market went. But now we turn to the first quarter, 2021, and guess what? There's this rotation where the tech sector's not doing so well, still positive, but not as well as it did, and financials are doing really well. So that's a difference between the Australian market and the US market.
So, Steve, it seems like the sensible thing to do is to be invested in all sectors and all countries.
That's absolutely right, Kim.
And of course, here at Sharon Partners, that is our investment philosophy. It's good to be diversified in all the major asset classes, fixed interest, Australian and international equities, and property, of course. And of course, within the equity allocation, we have a tilt towards value companies and small companies because the research has shown that they have a higher return over time. So Steve, how did these small companies and these value companies perform over the last quarter and over the last 12 months?
Let me start looking at the Australian market, and you can see that over the quarter, not much to say there, but over the 12-month period, very strong small company premium and a very strong value premium. That's got to do with that sector turnaround I talked about, where financials are doing well, IT's not doing so well. If we turn to the global market, you see the same thing. Very strong small company premium in the quarter and the year. The value premium is strong in the quarter. You don't really see it there over the year. Growth stocks are still a little better. That's got to do with those large tech companies had such a great run last year. I can say that with this turnaround, we're seeing a strong small company premium and a value company premium in the quarter. And of course, that's going to play into the Sharon Partner portfolios.
Thank you so much, Steve, for those insights, and let's hope that that small company premium and the value company premium continue, and more importantly, that the bull market continues.
Yeah.
Thanks again for joining us, and we look forward to seeing you next quarter.